forward-looking statement. I can't put all the team in, but I can put the directors and some of our advisors on. We've got an active board. Some of you might know, probably one of our best known would be Yale Simpson. He's been pretty active in the space. Terry Lyons is one of our advisors. Number of shares issued, we've got 55 million shares out, and we hope to have a few more later this week as we're hopefully closing a financing. Now, I'm going to start off by saying we love high grade. We're looking for high grade. In this price chart, you can see the gold price from October to March. You can see the nice increase in the price. That's all really nice for us, but what we're really concerned with is that base, that strong support at 1,050. And why we like that is if the gold price comes down, we want an asset, we want a gold project that can still make money below $1,000. And that's one of the great things about high grade. High grade also requires a small footprint. It is also lower cost to develop, and it can yield. It's not about how much gold you produce, it's about the margins in this case. These are easier to permit, especially in places like Washington State, and they have rapid payback. Our focus regionally is in Washington State, as you've heard. We're in what's called the Boundary District, and the Boundary District has produced about 10 million, a little over 10 million ounces of gold over the years. And the black box that you see is called the Republic District, and that area has produced 6 million ounces of the 10 million ounces in the Boundary District. Now, in that area, this really simple map, you can see Osoyoos. There's two grobens. All of this production has come out of these two grobens. And you can see all the little symbols indicating the historic mines. And the only operating gold mine in this district is called Buckhorn. That is owned and operated by Kinross. This mine is 1.3 million ounces at an average grade of 12 grams, and that's what we would call high grade. That ore is shipped 70 kilometers to the east and then to the south to the Kettle River Mill, and on this map it's a yellow triangle. That mill is a 2,000 ton per day mill. They can produce a dory on site. The interesting part of this story is that mill is out of ore within 1 year. And our objective is to find ore to feed that mill. And we've taken a lot of properties, keeping in mind we're looking for properties around the mill. We're working within a 32-kilometer radius. Our most active projects are shown on this map in the cross-hatched area, kind of the yellow color. Our strategy has been to get into these different areas and pick up ground, fairly small properties initially. We hit it hard with mapping, soil sampling, and geophysics, and that might sound trivial, but a lot of that has not been done since even most of the work here was done in the 90s, and that kind of work wasn't really done. We get all this data, and we really start to look at targets and develop targets, and we try to look at modern exploration or at least deposit models. We've done that in a bear market. If we're moving now into a bull market, our next stage now is to grow these land packages based on our models, if it's warranted, but also to really start testing these targets. Let's take a look at some of the individual projects or project areas that we've got. First of all, let's take a look at what we call Cook Mountain area. The Cook Mountain area is, you can see it here, there's a mill, that's where the mill is. Our projects are within 3 to 7 kilometers of that mill. In fact, we're getting even closer. We've got some projects within a kilometer of the mill. This map shows land in purple, which is held by Kinross, and you see those red X's. Those are deposits that were discovered and mined in the 1990s by Echo Bay, and Echo Bay was later purchased by Kinross. Our projects are Lambert Creek and Oversight in yellow. Now what we've done here, we came in and started really looking at these projects. Those deposits were initially thought to be skarn-type deposits, and then later they were thought to be volcanogenic massive sulfides. And when we first arrived on site, we thought volcanogenic massive sulfide type deposits made sense. We started taking a look at it, and what we found was that it really didn't hold together. And since then, we've come up with a very strong model, a lot of evidence supporting a sediment-hosted type model. And a good analog would be something you would see in China. These are really unconformity-related deposits. And what we're seeing here is you've got a limestone, we've got the mineralization on top of that, and then we've got a clastic sediment. Very interesting deposit because they occur in clusters, so we're expecting a number of these, and also they have a good range in size from, say, 500,000 ounces to about 3 million ounces. So a very good target for us in this part of the world. If we look at here around Nob Hill, this was called the Republic District. This was mined originally by Hecla. Hecla closed the mine down in 1995. This mine produced 2.8 million ounces, average grade of 20 grams per ton, and 15 million ounces of silver at 110 grams per ton. Again, we call that high grade. And what we've done in here is we picked up a piece of ground in red. This is what we call the Flag Hill property. I can't seem to get this to, there we go. Again, we did our classic geophysical surveying, mapping, and soil sampling. We came up with some really interesting veins. Some of these veins, and they're not always veins, they're veins with breccia zones running up to 9 and 15 or 12 grams per ton. But on this map, you'll see a long vein called the Flag Hill vein. On the surface, it has not a super impressive grade, 0.3 grams per ton, but as you go down into the section, you see the grades increasing. There's only 2 drill holes on this property in this district with 2.8 million ounces, and that drill hole, one of those drill holes had 41 grams per ton gold, 277 grams per ton silver, over about 90 centimeters. Now that's in historic reports. These two, that's never been followed up. Those holes were drilled in 1958. We've located the collars. For us, we'd like to go back in, drill those 2 holes, they're 180 meters each, and see which of those holes has 41 grams per ton gold. It's kind of a no-brainer for the company. Moving north about 15 kilometers along the same western margin of the Graben, we head to something called Empire Creek. Now, Empire Creek is also 6 kilometers south of the K2 deposit. K2 mine produced about 1 million ounces with Echo Bay and then later Kinross. Kinross is there now. They're exploration drilling, and they've outlined probably around 250 to 300,000 ounces of 12 grams per ton. Again, we call that high grade. On this project, the Empire Creek project, there's a lot of historic work. There's about 28 drill holes, a lot of really good intersections. One of the better intersections would be 10 grams per ton over 15 meters with 180 grams per ton silver. A lot of good numbers, but back in the 1980s, they couldn't seem to put a deposit together with any kind of continuity. And when we looked at this data, we said, well, a very high majority of these holes are vertical holes, and they were trying to connect the intersections with horizontal lines. And one of the things we did is we recognized a lot of east-west structures, high-angle structures, and we came in and did just a quick test to see if we could see any continuity in a high-angle structure. We did that. We got mineralization over a couple hundred meters, and we're very shallow, just to really test it with a shallow drill and trenching. And later we recognized that there is what we thought was going to be a good correlation with arsenic, we didn't see it. So it made us go back to look at the soils. And on this map here, this is where we did our drilling. And we recognized that there wasn't very good correlation between gold and arsenic. So we went back and did gold in the soils. And we got these really quite incredible soil anomalies. And you can see Graben margin, almost 1 kilometer of attractive soil anomalies. This has never been tested. On that property, we've got 3 of these types of features. So these are some of the things we want to test. What do we like about Washington State? We like the fact that it's very low-cost exploration, and that's been really helpful to us in the last 3 years, as long as we've been there. Good access, simple targets. There's nothing complicated here. We're using very simple tools, and we're looking for buried targets. Low capital expenditure. There is an existing mill. We don't have to build a mill. We're looking at building an underground mine, and that's the type of thing you're looking at. And I think permitting in that part of the world, if you're in a mining disturbed area, you're looking at something in the order of maybe 18 to 24 months, we're hoping. Low-cost production, Kinross demonstrated that they could produce an ounce of gold between $350 and $678 per ounce. $678 per ounce is what they are producing this year in their last year. So good metallurgy. This is a pretty interesting area for us. And for us, it's a very unique opportunity. It's very low cost. It's brownfield exploration. We're near a mill. All of our targets are permitted, and we think this is an interesting opportunity because as an M&A possibility, we wouldn't have to take it quite as far. We have an exit strategy where we're dealing with a group that has a mill and is looking for feed. Thank you very much.